Today, we unveil groundbreaking changes hitting the real estate market, prompted by a colossal lawsuit against the National Association of Realtors. Our experts predict short-term chaos and long-term opportunities. Military veterans share how you can turn these market shifts to your advantage. Stay tuned as we dive deep into foreclosures, market corrections, and future housing predictions. Don't miss out. Like and subscribe to stay ahead. Today, on Real Estate in Review, we will summarize the following videos. From Ken McElroy, we have new policy just changed real estate forever. From BiggerPockets, we have broke to millionaire in 5 years with military real estate investing. From Sachs Realty, we have home foreclosures, reality of personal financial trouble. From Jason Walter, we have in 2025, this is what will happen to the U.S. housing market. From Real Estate Mindset, we have expert, vicious correction headed for housing market. Welcome back to Ken McElroy's channel. Today, we're diving into one of the biggest shakeups in the real estate world in the last century. Joining us is Jason Hartman, an industry insider with years of experience. He's here to break down the monumental changes that have hit the market due to a colossal lawsuit involving the National Association of Realtors. The crux of the discussion is the transformative impact of a nearly $6 billion lawsuit settlement on the National Association of Realtors and how this will redefine how realtor commissions and the multiple listing service MLS operate. This isn't just a ripple, it's a seismic shift that could upend the traditional real estate market. Here are the key points discussed by Jason Hartman. Lawsuit details and changes. The National Association of Realtors faced a $1.8 billion lawsuit, resulting in nearly $6 billion in treble damages. A settlement of over $400 million was reached, impacting the MLS and how realtor commissions are structured. Previously, sellers would pay both the listing commission and the buyer's agent commission. Now, buyers have to pay their own agents, causing market disarray. Market impact chaos predicted in the real estate world as the new rules take effect, especially since the traditional way has been in place for over 100 years. This change aligns the U.S. more with international norms where agents have independent inventories, making it less efficient for buyers. Buyer agents might direct clients to listings with higher commissions, echoing past accusations of unfair practices. Current market conditions. Real estate downturn compounded by recent interest rate hikes, resulting in plummeted sales volumes. The market inefficiencies may create more opportunities for savvy buyers, but increase hassles for the average buyer. Supply remains historically low, ensuring high prices due to constrained housing availability. Jason Hartman made the following predictions. Immediate chaos. Expect short-term chaos as buyers and sellers adapt to the new commissioning structure. Lasting impact on real estate agents who navigated the old, more collaborative MLS system. Long-term opportunities. Market inefficiencies may benefit those with strong connections and real estate knowledge. Distressed sales may increase, particularly after a period of buyers overpaying during the pandemic, creating opportunities for savvy investors. In summary, Jason Hartman underscores that this is a tectonic shift, and while it spells chaos for many, it also creates a fertile ground for opportunities. For those with the right tools, knowledge, and connections, like you, savvy viewers, this could be a golden era. Be prepared, stay informed, and perhaps even more importantly, stay flexible. This is going to be a bumpy but potentially rewarding ride through the new landscape of real estate. Hey there, BiggerPockets community. We hope you're all set for a fantastic 4th of July. In today's episode, we have a special guest who's not just a seasoned real estate investor, but also a military veteran. We're diving into how military members can leverage real estate to build wealth, featuring the incredible story of David Perret. And for all our non-military viewers, there's plenty of golden advice for you too. The core thesis of this episode is all about how military members can effectively start and grow their real estate investments despite frequent relocations and other unique challenges. David Perret emphasizes that the military provides a solid foundation for real estate investing, aiding service members in achieving financial freedom much earlier than traditional careers might allow. Here are the key points discussed by David Perret. David Perret's backstory. David joined the Marine Corps in 2008 and spent his first 7 years on adventures, but not saving money. His financial journey took a turn in 2015 when he read Rich Dad, Poor Dad, leading him from being flat broke to a millionaire in just 5 years. Benefits of real estate for military members. Frequent relocations offer opportunities to buy in various markets. Housing allowances help cover living expenses, which can be redirected to mortgage payments. The VA loan offers unmatched benefits like zero down payments, flexible credit requirements, and low interest rates. VA loan benefits: no down payment and a possible 4% seller concession for closing costs. Low interest rates, even for multifamily units and lower credit scores. VA loans can be reused multiple times and are assumable by both veterans and non-veterans. David's first investment. David's first property investment was a duplex, greatly reducing his monthly living costs. He utilized insurance money from a damaged Harley for his down payment. EARL program. The interest rate reduction refinance EARL allows refinancing with minimal requirements, offering flexibility even after service members leave the military. David Perret made the following predictions. More military members embracing real estate. David predicts that increasing awareness and resources will lead more service members to leverage real estate investing to build wealth while still serving. Market flexibility. The adaptability of military lifestyle will encourage investments across diverse markets, benefiting from varying economic conditions. David Perret sums up the interview by emphasizing the incredible advantages military members have in real estate investing, thanks primarily to the VA loan and other military benefits. He inspires both military and non-military viewers to recognize and leverage their unique positions and opportunities in the real estate market. He leaves us with a call to action. Start early, take risks, and capitalize on the resources available to you. Welcome to this Tuesday night podcast on Sachs Realty. Tonight, we're diving deep into the realities of home foreclosures and financial hardships in real estate. We are honored to have John Hoffman from Why Rent Real Estate sharing his invaluable insights. John has vast experience in managing real estate transactions, including the rough processes of evictions and foreclosures. Buckle up, because it's going to be a ride full of hard truths and insightful revelations. The episode centers on the growing issue of home foreclosures, the current state of the real estate market, and the grim realities that come with financial hardships. John opines that the leniency in foreclosure processes and misguided loan modifications are merely kicking the can down the road, leading to even bigger problems in the future. Here are the key points discussed by John Hoffman. Current state of foreclosures. John shares his recent experience of evicting a tenant after 5.5 years of non-payment, illustrating the severe condition of properties upon evictions. Discussion about skyrocketing inventory and price reductions in Maryland, juxtaposed with Midwest where inventory is low and homes are selling quickly. Real estate market dynamics, high prices and quick sales in Midwest regions, despite limited new construction. In Maryland, move-in-ready homes sell fast with multiple offers, whereas properties on the market beyond a couple of weeks face significant price reductions. Dangers of loan modifications. Loan modifications during the pandemic have created a false sense of security. Many don't even know about these programs, but are still placed in forbearance. Modifications often lead homeowners to neglect maintenance, resulting in properties falling into severe disrepair. National real estate trends. Upcoming interview with Lance Lambert will provide in-depth analysis on nationwide housing fundamentals, inventory scenarios, and the expected fallout in various regions. Data showcasing that certain areas like the Northeast remain strong, while Sunbelt states are feeling the pinch. John Hoffman made the following predictions. Increase in foreclosures. John predicts a substantial increase in foreclosures as modified loans start failing and forbearance periods end. Signs like increased broker price opinion (BPO) requests indicate an impending influx of distressed properties. Market correction. John expects the real estate market to face a considerable correction, failing to sustain current high home prices and investor-driven dynamics. John encourages viewers to remain cautious, emphasizing that the current leniency in dealing with foreclosures and loan modifications is unsustainable. He advises buyers to be wary of overpriced properties and to look for more affordable opportunities, possibly in less competitive markets. For homeowners, maintaining your property is crucial, as neglected homes can lead to severe financial consequences. Finally, he highlights the importance of financial preparedness, as many homeowners are only months away from potential financial distress if they lose even one source of household income. Hey, savvy real estate enthusiasts, welcome back to the Jason Walter channel. Today, we're diving deep into Fannie Mae's bombshell forecast for the U.S. housing market through 2025. The video's core thesis centers around Fannie Mae's downward revision of U.S. home sales through 2025, attributing this to persistent affordability issues and elevated mortgage rates. Jason emphasizes how these factors intersect and what they mean for buyers, sellers, and the overall market. Here are the key points discussed by Jason Walter, top real estate agent and market analyst. Affordability constraints and elevated rates. Lack of housing affordability remains the primary constraint, limiting home sales even as listings rise. Mortgage rates have been hovering around 6 to 8%, discouraging buyers despite growing listings. Regional inventory differences. Northeast regions like Boston and Hartford have seen drastic inventory decreases since 2019. Conversely, cities like Austin, New Orleans, and Phoenix have seen significant inventory increases, showcasing regional disparities. Fannie Mae's revision on home sales. Fannie Mae downgraded their home sales forecast to 4.82 million in 2024, reflecting a modest 1.3% annual decrease. Persistent low sales levels, despite rising supply, indicate dwindling home buying demand. Jason Walter, top real estate agent and market analyst, made the following predictions: housing starts and sales. Single-family housing starts are expected to rise by 9% this year, followed by a modest 2.4% increase in 2025. New single-family home sales to surge by 133% in 2025, while existing home sales will see a 9% uptick, still below pre-pandemic levels. Mortgage rates. Fannie Mae forecasts 30-year fixed mortgage rates to average at 6.8% for 2024 and decline marginally to 6.4% in 2025. Given the volatility, rates are unlikely to revisit the 3% levels experienced in 2020-21. Home prices. Home prices grew by 6.6% in 2023, with a slower growth rate expected in the upcoming years, 4.8% in 2024 and 1.5% in 2025. Slowing price growth aligns with broader affordability issues and rising mortgage rates. Jason wraps up by underscoring the critical impact of affordable housing and elevated mortgage rates on future home sales. He emphasizes the importance of understanding regional differences and staying informed about market trends. For those eyeing the real estate market, the video's takeaway is clear. Strategic timing and regional awareness are key. Also, if you're in need of real estate guidance, do visit Jason's website for a top-notch agent referral. Welcome back to Real Estate Mindset. Today's video is an absolute whirlwind, packed with critical data and some moving day chaos from our host, who's on day 6 of his own personal moving saga. Will we see a major housing market correction? That's the hot topic on the table today. And to guide us through it is Travis, who's not just a real estate expert, but also currently a t-shirt-wearing, mold-fighting, rental-shifting warrior. So how credible is Travis? Well, he's been in the industry for over 2 years and is known for his no-nonsense, data-driven insights. Though remember, he's not a financial advisor. The bone-chilling core thesis of the video is the prediction of an imminent major correction in the U.S. housing market. Travis argues that this correction has been on the horizon for some time due to a triple whammy of high prices, high interest rates, and low incomes. This unsustainable market condition is bound to unravel with serious consequences for homebuyers and the broader economy alike. Here are the key points discussed by Travis Triple Whammy in the housing market. Home prices skyrocketed by nearly 50% in just 2 years, while real income declined. High interest rates, compounded by elevated home prices, mean that affordability is at an all-time low. Diverse market conditions. Different regions show varied impacts. Some areas like Washington, D.C., Miami, and Milwaukee are expected to experience significant corrections this year, while markets like Austin are already showing signs of significant distress with falling prices and other issues. Leading indicators and evidence. Leading indicators like inventory levels, price cuts, and days on market are flashing warning signals. New construction activities have plateaued, which is reminiscent of the trends observed before the 2008 housing crash. Travis made the following predictions. Major home price correction. Travis warns that we will continue to see home price corrections in numerous metropolitan areas, some starting this year. Supports this with trends in new construction, rising unemployment, and persistent high interest rates. Commercial real estate crash. A potential collapse in commercial real estate due to a $900 billion debt maturing this year and the compounded effects of higher refinance costs. Predicts a surge in foreclosures and a wave of distress across the sector. Travis wraps up by re-emphasizing the need for caution, highlighting the dangers for current and prospective homebuyers. If you're thinking about buying now, you might end up with buyer's remorse, joining millions of Americans already trapped in unfavorable mortgage terms. His call to action is crystal clear. Take a step back, base your decisions on solid data, and avoid getting caught up in emotional or hasty buying decisions. Oh, and one last thing. If anyone's interested in Bonkers t-shirts, hit him up below. Our experts provided a multifaceted look into the evolving real estate landscape. Jason Hartman highlighted the seismic shifts from the National Association of Realtors lawsuit, foreseeing immediate chaos but long-term opportunities for informed investors. David Perry emphasized the unparalleled advantages military members have in real estate investing, thanks to benefits like the VA loan. John Hoffman painted a cautionary picture of growing foreclosures, urging financial preparedness. Meanwhile, Jason Walter and Travis both pointed to significant market corrections, driven by affordability issues and high interest rates. While they all agree on the potential for market upheaval, their views on the severity and economic impact differ. Stay tuned to our channel for detailed guidance and strategies to navigate these turbulent times. Thanks for watching Real Estate in Review for July 3rd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.